Hello traders, it's Samurai Trader here. Welcome to this short training session. I meant to actually do this session yesterday, so I thought gee, I better get it done because we've seen some incredible volatility and volume for the last 3 or 4 days actually. So it's Thursday the 14th in Australia, so it's the 13th of the 1st 2016 in the USA. So we've seen some incredible volume go through and volatility on all markets. Today, for an example, we saw over 500,000 contracts traded on the black gold on crude. We had I think about 2.6 million contracts on the ES. NQ was a good, I think it was 370,000 last time I looked. So we've got some incredible volume, but what that brings, of course, is very fast moving markets. And with the traditional day trading settings that I use, for an example, they get thrown out the window. They just don't work unless you're a true scalper and you're very quick on the finger. So I just wanted to go through some options, as I've been getting a lot of emails from students wanting to know, how do we handle this? Well, hopefully this answers some of your questions. So trading fast moving markets. So if you're a newer trader, one thing I'd like to recommend that you consider is maybe trading the Globex market, the after hours market. As most of you are aware, I love trading the 233 ES or the 55 tick or 89 tick NQ contracts after hours, that is once the main market closes. And even today, for an example, it slowed right down, and it's very tradable, and it's a great market for you to learn how to trade, place your orders, etc. The only challenge is when you trade after hours, your broker requires you to put the full margin up per contract. So you might have to put up, I'm not sure what the full margin is right now, it might be 4,800 US dollars or whatever. Unlike the day trading margins of $600 or $800 per contract, you've got to put the full margin up. So that is one bummer. However, it's a great market. Okay, there's some great trading opportunities there. So consider using Globex to cut your teeth. Now, what sort of order? Now, usually I'll use a limit order, sometimes a market order, but in a really fast moving market, unless you're placing your order well above where the current market is, you just get stopped into the trade so quickly. So you may have to use market orders, and the problem is with market orders, 9 times out of 10, well, for me anyway, I tend to find that I get slippage, and that can really hurt you, particularly if you're trading the NQ and you've got a 14 tick target. You might get 2 or 3 ticks slippage, sometimes 4. So that can be a real concern, and that's another reason why you need to really look at the type of order, but the time frame, which we'll look at in a moment. So you may have to use market orders in fast moving markets, because limit orders can be really hard to get on, particularly if you want to get in at a certain price fairly close to, say, the close of a candle. If you want to get in on the close of a candle and the market's moving quickly, well, it could be 3 or 4 ticks before you know it. Now, another consideration is your risk factor, of course. When you're trading fast moving markets, as we're about to explore, usually you'll jump up and you'll trade a higher time frame. Now remember the risk rules. I risk a maximum of 0.5% per trade on a normal trading day. Now if I go to a higher time frame, it usually means, of course, that your stop is bigger because you're trading larger candles, and we'll look at that in a moment. And if you've got 2 ticks, for an example, on the NQ or on the ES, I like to be 2 ticks above the closest swing high or swing low. On higher time frames, your stop has to be larger, which means, of course, it can affect your risk factor, particularly if you're trading only one contract at a time on a limited account. So you just need to really consider that. So the other thing is, maybe you don't trade fast moving markets. Maybe you just take a day off and say, well, look, we've got crazy volume today, crazy market movement, and we sit it out. So it is a consideration. So what suits your trading style? Now on the ES, most of you see now on the ES during the current market hours, I'm using a 1000 volume chart. Now like in today's market where it's just going crazy, it wouldn't be unreasonable to jump up to 2,000. Now I know they're not Fibonacci numbers, and do Fib numbers make a major difference? Well, I seriously doubt it. I know what some of the Fib traders are going to say. Well, look, we like to use Fib numbers. Well, that's fine, but just whatever works for you, an experiment. And once you get used to looking at the market and the volume each day, you can tell whether you've got a fast-moving market. Now, by the way, when I say a fast-moving market, I'm not talking about red flag news announcements, okay, major news announcements. Just really all day today, the market was really moving, and yesterday and Monday. So just change the volume and look at what works for you. Now, what may be an early indication is look at what the 1000 is doing, but trade off the 2000 chart. Have a look at that. Now on the NQ, I like to trade the 133 tick, and one of my students from London today said it was just crazy, it wasn't tradable, and he's absolutely right. It just moved that quickly. Now when I say it's not tradable, it is if you're using market orders. Once again, if you're trading with the trend, some of these trends, are going for 30 minutes, and so you can jump in, but just remember that the further away or the closer to the target, and if you're putting your stop loss under the swing low or swing high, your stop maybe have to be an additional 2 or 3 ticks, which means then your target, if you're scalping on a 1-to-1, needs to be bigger. So once again, experiment. Maybe a 233, still maybe that's too fast. On the euro dollar, where I love the 5 range, maybe you've got to jump to a 7 or 8 or even a 13. But generally speaking, I find with the Forex market, unless you're around red flags, the 5 or the 8 or even the 7 is fine. So I just want to show you something on the chart in a moment. Before we go to the chart, of course, is understand the risk of trading. Most of you have seen this risk disclaimer. It's required to be put up by the CFTC. If you're new to my videos, please have a read of that. And of course, I cover all of this and all of my setups in the Day Traders Fast Track program. If you don't have my ebook, by the way, please go to my website and get the ebook and more information about my course. But let's have a quick look at some charts. I just want to really just explain just a couple of quick things. Okay, so if we look at what we're looking at here is the ES 2000 volume chart. So normally I'd be on the 1000. So here we got we can see we've had a nice T20. Down here we've got basically a 289 bounce, and we would get our signal for our T1 signal 1 tick below here. So if we just take the low of that bar for an example, a low of 89, a high there of 91.75 plus 2 ticks, 2. So what you've end up with is at least as a minimum an 8 tick stop, which is $100. Now if we're trading the 1000, the maximum stop normally I have is a maximum of 6 ticks, which is $75. And when I mentioned here it was only 100, I'm being generous. It's probably at least really an 8 to 10 tick stop required by the time this market moves. The reason I bring that up, that has a big effect on your risk percentage of your account that you're trading. And remember, this market was moving that quickly. For an example, between there, that's 242, down to here, that's 247. So I mean, it's really moving quickly. So traders, in closing this off, I didn't want to make this War and Peace, this recording, is it just remember trading fast moving markets is huge opportunities. Of course, I love momentum. When you get those momentum trades, it runs, but just be cautious, and if it's moving too quickly, increase your time frame. There's no hard and fast rule. Find something that works for you. And the last thing I wanted to mention, by the way, I'm working with a team of prop traders, all young guys, all under, I think they're all under, there's 7 of the guys in the team, and they're all under 29. And do you know what they drink copious amounts of during their trading hours? And they work a good 6 hours on the screens. Heaps of Red Bulls. Now traders, the reason I bring it up is there's been so many studies done on anxiety and depression in men, particularly young men, in drinking high energy drinks. Now I know that I'm throwing this out, I know it's a bizarre thing for me to bring up, but it's not really, because you've got to really be really alert. And we know that anxiety, irritability, nervousness, restlessness, tremors, all of these things, anxiety and depression, a lot of this now, a lot of studies coming out for men, particularly with high energy drinks. So if you're putting in, for a start, if you're doing less than 2 hours on the screen, you shouldn't be exhausted. But if you need a drink, grab a coffee rather than grabbing these drinks, because we're just bringing this up with these guys because really they admit they've basically admitted they're addicted to these drinks. So I just wanted to throw it in. Oh, it's a random thing, but health is really important to us as traders. Mentally, we want to be really focused. This is so important. Oh, and the last thing, in reference to the swish pattern video I put up, thanks for some of the great feedback I've had, is that yes, look at some of the videos on YouTube on the swish pattern. You'll learn it a lot better than what I can teach you. But the bottom line is, if it doesn't work the first 2 or 3 days, just keep doing it. Okay. Once again, if you've got a baby that's learning how to walk, how many chances do you give them? Well, as long as it takes, right? Well, likewise, in learning how to use the swish pattern for your trading, just do it once a day. It only takes you 10 minutes, 5 minutes even, to go through 10 times to do the swish. Eventually it'll switch in, and I guarantee you, if you master the swish pattern, you'll become a much better, more focused, disciplined, confident and competent trader. So once again, focus on really practicing those swish patterns, because it's going to make a huge difference to your trading results. Thank you, traders, and I'll see you on the next video.